Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, this video is being filmed on Sunday for trading on Monday, December 7th, 2009. And we have a few things to talk about here. One, the bonds heading down, traders. The last 2 or 3 videos I did for you, I had this there, right? I put the head and shoulders formation, and I said my brand of analysis tells me there'll be a head test. If it fails, a breakdown will take place in bonds. How many of you have been watching? Absolutely, that's what happened. Go technical analysis. No crystal ball, traders. You can do this at home. It's just technical analysis. Also, the S&Ps and the indices we feel are going to break out towards the upside. And if you've been listening and paying attention to the news and reading newspapers, you recognize that we are in a recovery, and now it's even starting to show up slightly in the unemployment levels. Traders, I've been maintaining in these videos for 6 or 8 months now that we are in a recovery, and what you think about the Fed or Bernanke or Paulson, whatever it is that you think is your opinion, but I have been stating that these guys are going to be hailed as heroes as history marks time here, and I'll tell you what, whether you like it or not, if it stays the way it is and we continue to recover, they will be hailed as heroes. Banks are already paying back the TARP. They're doing much better. Listen, I am not on anybody's side here. I don't take sides with the news. I don't take sides with the Fed. I am a pure analyst, and I trade what's on the charts. But what's been on the charts has been what's prompting me to tell you for months on end that we are in a recovery. And get this. How many of you have heard me say from months on end, when we do start recovering, you are going to, at one point, see the dollar and the stock market go up together? That started happening on Friday. Will that continue? I am not here to say that it's the beginning of that pattern, but the market is certainly starting to show us signs that it will eventually do that if it hasn't started already. Why will that happen? Traders, there's a lot of reasons, and I couldn't spend, I'd spend too much time in this video explaining it to you, but in simplest terms, if our markets are recovering, a lot of traders out there in the rest of the world, not U.S. traders, are going to need to buy U.S. dollars to buy our U.S. stocks, and if the Fed has to raise interest rates at some point, you're going to need to buy U.S. dollars to buy U.S. interest rates. So there will be a moment in time during our recovery where dollars and S&P will go up together. That's the way recoveries work. I've been maintaining that for months on end. I've never said it's going to start happening right away. I said keep your eyes open. It'll come our way. And we're starting to see that. Sign number 2 that we are certainly in a recovery. 1 is the market's been going higher, right? 2 is that now you're starting to see dollars and stocks go together. That is what happens when you do have a broad-based recovery. So let's see what's going to happen there. Again, I'm not here to say, wow, party, let's go. But I am here to say it's been following the analysis well, and the analysis has been pointing north for quite some time. What else do we have to talk about? Traders, gold bugs, beware. I want to have a quick conversation with you gold bugs because this is very important information. Listen, the price of gold has been skyrocketing, and many of you traders are buying gold, and some of you are buying it for pure speculation, and you know what? Then that's fine. If you're trading gold for spec, jump in, jump out, make your profits. There are also many of you that I've heard from that are buying gold because the financial world is going to come to an end. There's going to be a meltdown in the government. The dollar's going to be worthless, and the banks are going to go broke. If you are buying gold, traders, and you are not receiving the physical gold in your hands, do you think you're going to get that gold if there's a meltdown because you're holding a piece of paper that you received in the mail? Listen to me. If you are buying gold because you want to put it away, God forbid we do have a real meltdown and gold's the only currency left, if it's in a bank sitting in a safety deposit box, you're not going to be able to get into the bank to get your gold. If it's in a receipt that you got from Monex or some company like that, you're never going to get that gold. Because imagine this. The markets do seriously break down. There's a worldwide meltdown. Currency is worth nothing. Who's going to give you your gold at that point? Who's going to be honest enough to go, here's your gold. We'll send it to you now that you need it. It's the only currency on the planet. None of these companies are going to be capable of doing that. The other thing is, if you look at COMEX receipts, if you're buying COMEX gold and you're holding it in your position expecting to take delivery one day if the world melts down, there is not enough gold to meet those delivery demands already. Forget about all the new buying that's come in. So I am here to say this. Again, if you're speccing gold, fine, spec gold, I have nothing to say to you. If you are buying gold to safeguard yourself against a real, true worldwide economic disaster, you better take delivery on that gold and bury it under your basement or somewhere where you have access to it, because you're not going to be able to go into a bank and get it. And the companies who are sending you receipts or statements are certainly not going to be able to meet the demand and give you your gold. So if you are buying gold, make sure you take the delivery and bury it somewhere. Get a safe, dig a hole in the ground, put it in there. Because let me tell you something, even if you give it to a good friend, if the markets really melt down and this guy's children are starving, you think he's going to give you the gold? People protect themselves if something like that happens. Now, I don't expect that to happen. I think the gold bugs are nuts, but it could. And what do I know, right? If it does happen, make sure you have the gold physically in your hands now. God forbid it happens. You will have the currency that you need. Just a warning for me, traders, because I'm getting so many people going, Oscar, I got gold and I'm going to take, if the markets really melt down, I'll have it. But if all you have is a paper receipt that you received in the mail, forget it. It's not going to happen for you. I am telling you, you'll never get that gold. Please take that warning. Another thing about gold is this. The gold started to really skyrocket when the dollar topped out. If the dollar is now bottoming out, the gold is probably topping out. So be careful there too. And I'm not saying that the gold is done going up. I'm giving you caution. I'm just trying to share some good information with you. But if you're an analyst and you see a bottom coming in the dollar, rest assured gold at 1200 is too expensive. So be careful there. Gold's priced in dollars. Dollars go up, gold goes down. Dollars go down, of course, gold goes up. We've seen a lot of that. Be careful there, traders. My gift to you, I hope it helps you. Take delivery of your gold and bury it somewhere. All right. Now, traders, I want to show you some charts that should really interest you. I'm going to show you what happened in the bond since we've been calling for this formation, the test of the head and shoulders in the break. Then I'm going to show you some world indices. Then I'm going to show you a couple of currencies. And from there, I think we can begin to paint a picture of where these markets are likely going next. So with no further ado, traders, let's go look at some charts. Okay, traders, what we are looking at is the 30-year bond chart. It's a daily bar chart of the March contract. Traders, this is the same chart we showed you in the last 2 or 3 videos. And we said, look, shoulder, head, shoulder. And then we had an area where we expected a test of the head, right? And if it failed at that test, we should have a big breakdown. Well, I would like for you to see what happened because we chased this trade down all week last week and we nailed it. And here is what happened. This is the before shot, and now I want you to look at the after shot. Okay, traders, the very same chart. Fundamentals always come out in the charts first. A failed head test produces a downdraft. Here's where we were. Here's where we went. The fundamental was the unemployment report. It came out in the chart long before it was released. Fundamentals always come out in the charts first. So once again, before, after. You see what I'm talking about? Look, traders, this is the before chart one more time. And this is what happened afterwards. Look at the size of that drop. That is technical analysis firing on all 8 cylinders. And we expect more downside in the bonds as well. So keep an eye on the bond market. We are now sellers of rallies unless we get back above the head up here of the head and shoulders. Okay, traders, the granddaddy of all charts of recently, and it is the Dow Jones Transportation Average Daily Bar. And traders, I've showed this chart to you before. Repetitive patterns are the anchor of technical analysis. Look at this. It puts in the triple top, also a triple bottom, but mostly in a flat. Then it goes into a parallel channel. Rallies up, puts in the same exact formation, only a little bit smaller. 3 tops, 3 bottoms. Rallies up through a parallel channel and then does the same thing, puts in the 3 tops, and look where we are right now, traders. Here's your parallel channel, and here is where we are, above the platform or plateau. We're trading up here now, and the likelihood is we will continue to move higher inside of that parallel channel. Traders, the transportation average is the leader of the U.S. indices. 1, 2, 3. Repetitive patterns are certainly the anchor of technical analysis. That looks to me like it's going to break out now like it did this time, and like it did this time, and like we're going to see now. Traders, as we know, no one knows for sure if the market will go up or down from day to day, but the analysis is pointing towards that as far as the formations are concerned, and technical indicators are bullish as well. So I think that wants to go higher, and we have some other charts of other indices to show you, so let's look at a few more here. Okay, for my German fans out there, this is the German DAX Daily Bar December contract. This is an inverted head and shoulders, traders. An inverted head and shoulders formation is a bullish indication when in a bull market. Clearly a bull market, right? It's going up, it's starting down here and ending up there. Bull market that we see, which means this sort of a head and shoulders is a continuation pattern to move higher. It's called an inverted head and shoulders. What else has it done? It's come down to my Omni proprietary average twice and bounced while it was making its inverted head and shoulders. So agreeing with the Dow Jones transportation average is the German DAX, and that looks bullish right now. Let's see what we get. But that's not the only index I've looked at. There are others, so let's go look. Okay, traders, this is the FTSE now. The FTSE, it's the London stock market. It's the daily bar for December. This is the same setup as you've seen in the DAX chart. First the bull market, then a pullback into an inverted head and shoulders. The next step should be a rally out. And the world indices usually travel with one another. Sometimes US leads, sometimes the British will lead, but almost always they do follow one another. So the patterns are increasingly pointing towards the upside. What else is interesting is on the way up we ran into a plateau right here and here. But now we are above that plateau clearly and starting to move higher. So once again, traders, that looks bullish. Let's go look at another index. Okay, traders, what we are looking at now is the Nikkei, the Japanese stock market. This is, again, a daily bar chart of December contract. We have smartly rallied ever since we hit the 200 bar moving average, and everybody knows that's a biggie. We have bounced off of it since, and now we have settled above the Omni proprietary moving average. One more settlement above, and I'll be willing to think that this market's going with us. So once again, another world index also pointing higher. Each one of these indices that I've pulled, I've also pulled many technical indicators. All of them right now are pointing north. So I like what I see in the indices. I think the Santa Claus rally will happen this year. I think we are recovering, and I think the bulls are going to come in. Traders, there are trillions and trillions of dollars on the sidelines. Hedge fund managers just looking at these charts and looking at the market's rally, and half of them are frozen and haven't gotten in yet. I assure you, they're going to start getting in the higher we go, and the more economic signals that come down from the government or the Fed that show bullishness, the quicker these guys are going to want in. I think there's going to be buying pressure that's going to push us up. If it doesn't happen in December, it's definitely going to start next year. Well, I should never say definitely, traders, because we all know no one knows that for sure. But if you are a fan of technical analysis, the cards are pointing towards a winning hand on the upside. Now, traders, I'd like to show you a couple of currencies because, again, for you gold bugs, the currencies, especially the US dollar, is absolutely involved in the pricing of gold. So let's go look at that now. Okay, traders, you are looking at the euro currency December daily bar chart. It has been in a bull, no doubt. But what I'm finding interesting are two things on this chart. One, this is a fantastic average that almost never gets settled below. Not one of these bars has an actual settlement below that average. But as of Friday, we absolutely settled below, because here's the average and here's the settlement. We settled below it. Now, one-day settlement below an average doesn't get me too excited. However, if you see, this basically looks like a bear flag right here, and we're now also below the bear flag. So we're below a key average that hasn't been able to be broken in months and months, and we're below a bearish flag. So if we're below a bearish flag and we're starting to get below averages that have held, in the euro currency, that obviously means the dollar index is going to gain some strength. Now, if the dollar index gains strength, the gold goes down. Be careful, gold bugs. Let's go look at the dollar index chart. Okay, traders, we are looking at the U.S. dollar index December daily bar. It has been in a well-defined parallel channel for a long time, and once again, below that very same average that the euro currency has been above. But what has happened? We've settled above that average for the first time in a while. This one did not settle above. That did not settle above. This settled above the average and above our parallel channel. If the dollar is bottoming, that means euro currency is topping and gold will be topping along with a lot of other commodities. So listen, traders, you need to keep your eyes peeled on this dollar index. Pull your indicators. Take a look at this parallel channel. The more days we settle above this parallel channel, the more likely a rally will ensue. Again, gold is priced in dollars. You cannot have dollars going up without gold going down. That is the way it works. Now, let's go take a look at the gold chart, which should sum up this whole little speech right here. Okay, traders, many of you who may be fans of my videos remember that back in March, April, we called for the top in the U.S. dollar and the bottom in the U.S. indices, or at least a bottoming area. And the market has been going up since, and we've done tons of videos and stayed with it, right? Here's the important thing. This is right around the same time frame where the U.S. dollar topped out and began its decline. And it's been getting hammered. Through the whole thing, the gold has rallied big, right? Well, now it looks like there's a possibility that the dollar is bottoming out. If the dollar is bottoming out, the gold is topping out. Because when the dollar topped out, the gold bottomed out. So they work opposite one another. If, in fact, this is happening, then the gold will start to come off. Now, I am not here to say that the end of gold is here and that the gold is a bear now. But I am here to say I watch all the markets together and they paint a picture for me. And at this point, I wouldn't be buying gold yet until the dollar gives me definite direction. Keep an eye on the gold chart. Indicators are quite bearish here. You've had a major top put in and a major drop. Let's see if it's going to continue. Again, traders, I'm not here to say don't buy gold, because if you're a speculator, go for it if that's what you think you should do. But I am here to say, if you know how to gauge gold, watch the dollar. Dollar bottoming means gold topping. So, traders, you see those charts? I mean, wow. There's a real picture there, and I hope you're paying attention. Now, one thing, that bond setup, traders, I mean, that is a simple form of analysis that any of you can do from home. And if you looked at that before and after shot, I showed it to you a couple of times, you see that technique worked really well, was telegraphed by us way before it happened, and it's something that you can reuse over and over again when you see it. These videos are here to teach you how to do this for yourselves, so please pay attention. Traders, if you like what you've seen in this video, we have 500 and...
That's Mike.
You just wrote it down for us. 500 and what?
I didn't write the number of the videos down.
521 videos, very much like this one, with a lot of the techniques I just showed you in the charts. So if you want to subscribe to our videos, you'll get to see this over and over again. Each night our videos are geared for tomorrow's trading. We're not the type of people to stand there and go, oh, look, this could have happened if you would have. We're here to say this should happen tomorrow if you're paying attention. So these videos are timely and they are for the next day. So make sure that you are watching the videos. Come to www.youtube.com/futuresanalysts and subscribe to our videos so that you are notified when we put one out. All right, what else is going on? Traders, with that S&P and the indices, I mean, did you see that Dow Jones Transportation Average get above that third plateau? It should continue. DAX with the inverted head and shoulders looking good. FTSE the same. Nikkei looking good. And then, of course, traders, you know the speech I gave you about gold. Just do me a favor and take your delivery and put it away. Because seriously, if you are buying gold to safeguard your family from a true economic meltdown worldwide, how are you going to get your hands on it? Get it now while times are good and put it in a hole. The other thing is, if you're buying gold for speculation only, watch that dollar index, because if it goes up, you're not going to profit on long gold any longer. So be careful there. Traders, do your own homework. Don't listen to a kook like me. Do your homework. Make sure you agree with the analysis put before you, and then you can have at least someone like me to gauge your homework off of. Because if you've done your homework and it somehow coincides with mine, remember, I got 28 years doing this, traders. It's not like asking a new guy from down the street that just started trading yesterday. If your analysis looks right, if it jives with mine, you're probably doing a pretty good job. So do your analysis, compare it to mine after you've done your own, so I don't jade you with my own thoughts. And always, always, always trade with stops, traders. I will say this in every video. A stop is your best friend. Without it, you can have your head handed to you. How many of you didn't have a sell stop in gold on Friday? I know there's enough of you licking your wounds right now. You have to use stops. How many of you seen gold drop 60 bucks in one day? Well, it happened on Friday. And if you don't have a stop in, it could happen to you. And if you're one of those people with a $5,000 account and it goes $45,000 against you, you're on the hook for that money. So please trade with stops. They are your best friend. They will knock you out of a really, really horrible position if in fact you end up in one. All right, traders, come on down to my site. It's www.livewithoscar.com. Make sure you sit in the chat rooms with us. We're there to share information with you and to help you traders get this right. And always keep your emotions out of trading. And the reason why I tell you to place your stops is so that if a move like what happens in gold on Friday happens to you and you got to stop in, you don't have to panic. Your emotions are out because you say to yourself, when I put the gold trade on, I calculated my stop, I'm risking $2,000. If the gold breaks, I get knocked out for the same $2,000 I was risking, and I'm able to live with that because it was a predetermined plan. And that should basically keep your emotions out of the trade. Put your stops in first. Keep your emotions out of trading. One of the best things you can do to keep your emotions out of trading is say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.